What's up, everyone? Today is June 30th. It's a Wednesday, last day of the month. I'm gonna be going over I think it was three trades I took today. They were on. Last one was on Nvidia. I took one on Tesla. Took one on NIO as well. Also going to be covering a Roku trade, and then finally I'm going to be going over some really important psychological tips. I'll post a timestamp for the psychological tips later. If you just want to go over those and not the trade recaps, that's fine. But let's get straight into it. As always, I'm always going to start off with the higher time frame because that's where all of my plays originate from. So I took my first trade on NIO. So let me go ahead and start with NIO. Okay, so a couple of things I liked about NIO. On a higher time frame, we had this resistance level around 51.9. It acted as a pivot level. 51.9, 52. Just that general area acted as resistance and support. Another thing I liked about NIO is just on a higher time frame, there's clear bullish price action. You can see that ever since a couple of weeks ago, we've been making clear higher lows. And then if I go to a daily time frame, these last 2 or 3 days, we've really taken off. So on top of the fact that there's bullish price action on a higher time frame, and that we have the 51.9 to 52 key level, NIO also came out with some news. I believe the news was that they're selling electric cars in Germany and also all of Europe. So that's huge news, especially for a startup company like NIO. So NIO for me is definitely on watch. Let's go down to an intraday time frame now, where I can really analyze my entries and exits. So not only do we have a couple of touches before, what really validated this 51.9 to 52 key level is the fact that at 9:45 this was the high of the day. Some people didn't take this trade because of this upper wick. I was a little bit cautious, but then when I saw this lower wick at 9:50, I instantly realized that buyers were interested. Not only did the fact that we have these lower wicks, volume was clear as day. This volume is it's amazing compared to previous other days. It's just super consistent, letting me know that with the volume and the lower wicks, buyers are clearly interested. So I entered, don't remember my exact fill, but I do remember entering 6 contracts. I think it was at 138. And my final target was, I think, 4-hour supply at 54.62 or the 54 psychological level. So, all I did was just scale out on the way up. I'm not going to be going over the exact scale outs, but, I just took profit along the way. My final scale out was when we failed this 30-minute RBNR. So I exited my final contract at 11:30 or 11:35 when this candle closed and we failed the 30-minute RBNR. So I was in this trade for about an hour and a half, a little bit longer. So really good patience from my end. Netted around $300 on an $800 investment, so a little bit less than 50% return on investment, which is really good. 300 may sound like a lot to you or a little, but for traders who are trading with like 200, 300 contracts, what's really important isn't really the contract size, it's the return on investment, it's the consistency. 40, 45, 50% return on investment with 200 or 300 contracts would be unbelievable, but I need to develop that consistency first with smaller size. So this was a nice $300 winner on my end from NIO. A couple of minutes later, I took Tesla. I genuinely believe this was a very good setup, which just didn't work out. On a higher time frame, Tesla is forming this wedge pattern. On top of that, we broke the 633 key level, which fueled a move to the upside. We also broke out of all of these supply zones. We don't have supply till 707 here, so there's a lot of room to Tesla on the upside. So the exact trade I took was so Tesla was making higher lows. On top of that, it had really good volume, and then what really caught my attention was this 1030 candle. Look at the volume, highest volume of the day, no upper wick. This is a beautiful basing candle. So I had entered right at 1040. Just highlight it for you. I think it was 2 contracts at 4.57. And then I waited for this candle to close. That was really good on my end. I wanted to give it 5 minutes to develop. As soon as this candle pushed up and started rejecting, I stopped out for a very small loss. I ended up losing around $70 on a I believe 901K investment. So that is very good risk management on my end. I'm going to be going over these psychological tips later, but just know that if you are trading at the best of your ability, they should either be small winners, big winners, or small losers. There should never ever be big losers. So in this case, this was a very perfectly executed plan. Recognized that I was wrong, stopped out, all good, because a $70 loss is nothing in hindsight when I capitalize on this move through this trend line. The winning side of this is going to be a lot more than $70. So I'm completely fine losing, I think, $77 on this Tesla trade. Next trade I want to go over is Roku. This was a monster setup today. Worked out beautifully. Really quick on a higher time frame. 444.7 was a very critical level. You can see that we had multiple rejections right here. Top of that, go to a daily time frame. Roku has clearly caught momentum, was flagging on a daily time frame. This is a picture perfect setup in my opinion. Let's go down to intraday time frame. Did not take this trade. I'll explain why. But a couple of things I want to go over is one, Tesla, or not Tesla, Roku is the hell. Sorry about that. Let me go to this trend line right here. So Roku is clearly increasing in volume towards this breakout at 444.7. Not only do we have that, we have these thick body candles with increasing volume, and then we have a 5-minute RB&R right before the 444.7 key level. So I mean, this is as good as the setup gets. I really don't know what can constitute as a better setup than this. Everything aligned up, the increasing volume, the thick bodied candles, the 5-minute period of consolidation. The only reason I did not take this trade, just looking at ES and NQ, we were extremely choppy. Roku entry was somewhere in this chop. That's the reason I didn't play it. But one thing I want to go over, one thing I've learned is that if ES and NQ are choppy, all that means is that the chances that setups can form are much lower as opposed to a trending market. However, if ES and NQ are choppy, as long as they're not weak, ES was still making higher lows. Go over to NQ. NQ again double bottomed, was still making higher lows. I do agree it was very choppy. However, NQ and ES were still holding value somewhat. None of them were weak. So one thing I learned is that if ES and NQ are choppy but are holding value, that's fine. Just be a little bit more cautious when entering the play, but still enter because there is still a good chance that the trade can work out. If ES and NQ are weak, then it's a different story. But ES and NQ were choppy, they were holding value, and Roku was increasing in volume and momentum towards the breakout. So that's just what I wanted to go over. This was a crazy move. You could have entered. I remember contracts went from like 5 to 15. Could have scaled out at 90-minute supply. If you were a little bit more patient, you could have caught this 5-minute RBR. Let me just quickly go and check how much the contracts are worth. I just want to display this just to show you the power of options. Remember there were the 350 calls. Oh wait, no, 450. 350 would be insane. All right. Okay, so from the 5-minute RBR breakout, contracts went from around 5.2 to a high of 16.8. So this is what I'm saying. Trades will either be small winners, which I'll show you in my next one, big winners like Roku, like NIO, or small losers like that Tesla trade I took. So Roku was a beautiful trade. Dylan caught this as well. Congrats to everyone who took this. Final trade was on Nvidia today. I really thought Nvidia had the potential to move higher. So where I entered on Nvidia was through this 803 key level breakout. Just go to a higher time frame. I can really show you this level. 803, 1, 2, 3, 4, 5 rejections here. So I thought a breakout of 803, we could break all-time highs and then move higher. That, however, wasn't the case. But let me quickly show you why I entered and my thought process. So one thing I really liked about Nvidia was the fact that we were increasing in volume. This was pretty similar to the Roku setup. We had these thick-bodied candles, and then if you go to a 1 minute chart, you can see that we put a nice flag pattern. 1, 2, 3, 4 minutes of 5 minutes of consolidation right before this 803 breakout. So I did enter. I think it was at this 1506 candle right here. Some may argue that we are extended on a 5 minute chart. However, one thing I've learned is that we're not always going to get 5 minutes of consolidation. So I do open a 5 minute and a 1 minute chart side by side. I saw the consolidation on the 1 minute, took it at around 306, entered two contracts at 4.57, got this nice move up, scaled one out at 5.3, moved my second contract to break even. Price came. I didn't sell it here. Thought I wanted to be patient. I wanted to give it another potential to break all-time highs. Didn't get that. Started moving lower again. Realized that buyers were not ready to push us lower. Stopped out of my second contract for like break even or $5 loss, 5 or 7 I think. So on this trade I netted around $62. So really it was kind of a flat trade, small winner. But that's just how trading goes sometimes. Um, uh, we're gonna have small winners, big winners, or small losers. So those were the trades. Those were the trades I wanted to document. There were a pretty good number of setups as opposed to the last 2 days. And now I want to go over to the psychological tips. How long is this video? 11 minutes. Okay. So I think you've been hearing me say the same thing over and over. If you are an excellent trader, if you are a trader who trades with almost perfect accuracy, not talking about the money, let's put the money aside for the moment. Let's just talk about a trader with perfect accuracy. So I know the way I trade. Breakouts with supply and demand as contextual analysis will yield me a win rate of above 50%. My win rate is closer to my win rate if I was a perfect trader would be closer to around 70 or 80%, probably like 75. So that's the first thing to realize. My strategy will yield me a win rate of greater than 50%, closer to 75, 80%. On top of that, if I am a perfect trader who doesn't make any mistakes, there will be there will be three potential outcomes. The first outcome is a big winner. Let me highlight that. Roku was a huge winner. It could have took off your final contract for a 200% return on investment on your contract, which is just unbelievable. This was a huge move considering it was a Wednesday. Not only was Roku a huge move, NIO was also an insane move to the upside. This was a huge winner. Not as big as Roku, but contracts did move close to 100% on the final scale up. So NIO and Roku were very, very big winners. So that's the first potential outcome. Tesla. This is a small loser. Not every trade is going to be a winning trade. I'm really, really trying to drill this into those who are learning and people who watch my videos, but you're not going to win every single time. It's just not possible. The market is way too complex for you to be winning every time. There's infinite number of variables. Everything is changing every day. We have to continue to adapt. Not every trade is going to be a winner. But if a trade is not a winner, it should not be a big loser. It should be a small loser. I stopped out after this 5 minute candle after we started moving to the downside because I accepted the fact that my trading plan was invalid. My trading plan failed. And, I prevented myself from losing, another 30-40% on my contracts. I would have never had the mindset of, okay, Tesla can maybe get back to this trend line when price is trading around 682. I'm just not going to let this happen to myself. I'm not going to bag hold here. I'm not going to revenge trade, or I do my best to not revenge trade. So trading, as I talked about, should be a big winner or it should be a small loser. You should never let your losers become too big. And then the final outcome is a break-even trade or a small winning trade. So this trade on Nvidia, it was a very, very small winning trade, $62 from my end. I was expecting a much bigger move higher. I gave it the time it needed. However, buyers just weren't ready. So I accepted that. This is another thing I want to go over after this. I accepted the fact that the market wasn't ready, and I took the small win. Let me go over to Apple yesterday. This was a trade through this 135.2 breakout. I took this. It was super choppy. I lost $4 on this trade. You know, I made over 300 on NIO today. Made 60 on Nvidia. Could have made whatever, a grand on Roku. So losing $4, including commissions, on a trade like Apple is it's amazing risk management from my end. You know, I accepted that Apple didn't have the volume strength and momentum to continue higher. In hindsight, it did. I didn't know that at the time, but I accepted that my plan was invalid on Apple, so I stopped out for a $4 loss. So you really just have to accept that you're not going to get everything right every single time. And this kind of goes into my next point. A lot of the experienced traders, they understand that you don't need to be right every single time. The way I trade yields me a win rate around 75 to 80% if I'm a perfect trader. And then with my risk to reward, it's closer to, I think, 3 to 1 on average, maybe even 4 to 1. So 4 to 1, 3 to 1 risk to reward ratio on a strategy that can yield you 75 to 80% win rate. That's going to make you extremely consistent. It's definitely going to make you consistently profitable. And as traders, that should be the goal: becoming consistently profitable. So you really need to understand that you will not win every single time in the market. The market is just too complex for anybody to get it 100% of the time. Not even Dylan, not even Carmine are going to get 100% win rate. It's simply not possible. So yeah, I just wanted to go over those two psychological things. I know I repeat that a lot in my videos, but those two things really helped shift my trading around. Just knowing that I'm not going to be right every time, and knowing that if you trade perfectly, you'll never ever have a big loser. Um, one final tip. This isn't a psychological tip, but a couple of things I've learned is I'm personally just not going to trade in the first 5 minutes. The reason why is uh, trading in the first 5 minutes. You can get extremely big wins. Let me highlight that for you. Tesla. I know Dylan took this trade. It was right here. Okay, this was a first 5 minute trade. This was a huge trade, 100, 200% return on investment. Um, this is a power of trading in the first 5 minutes. We go to Nvidia, same thing. First 5 minute trade, beautiful trade, return on investment, 100, 200%. But then there's also potentials for big losses. You go to Google. If you took this trade in the first 5 minutes, you would have got killed. I personally took a trade in the first 5 minutes. It was on Workhorse. I lost about 50%, I believe. I'm going to be completely transparent. I lost a lot of money on this trade, 500, $600. Trade in the first 5 minutes, anticipating the 18 key level breakout. Didn't get that. I didn't really respect my stop either. So trading in the first 5 minutes is very risky, right? You can either get big wins or big losses. So my personal advice is just stay away from the first 5 minutes. Not only are you saving your physical capital, but you're saving your mental capital as well. That's a point which a lot of new traders don't understand. The mental aspect to trading is at least 10 times more important to the physical aspect, the capital wise, the money aspect. Trading is 90% for me, 95% mental, and then 5% skill. Anybody can learn the skill. So it's really important to protect your mental capital. Only trade when conditions are right. Uh, do don't force trades. Don't go against your strategy. And essentially, what you're doing in the first 5 minutes, if you're trading there, is you're depleting a lot of your mental capital, because trading in the open is very risky, and premiums jump around a lot. So there's a lot of mental capital involved when trading in the open, and there's no point of just using all of your mental capital in the morning and then avoiding some of the good setups which happen later on in the day. So that's just my take on trading in the first 5 minutes. Other people have different opinions, which is completely fine. It's just something that I've noticed, and I'm personally just going to avoid trading the first 5 minutes. So I'm definitely going to end the video here now. 20-minute video. I hope you guys took something away, if it was through the trade recaps, if it was through the psychological lessons. leave a comment, leave a like, maybe even subscribe if you want to. But I will be back to trade. Tomorrow's a new month, and we'll go from there.